Happy Friday, traders. Okay, so the market has focused on a couple of things in the last 24 hours. The first one was the NVIDIA earnings, fourth quarter earnings that came out after market close yesterday. Now, those earnings were very good as usual. So NVIDIA does what NVIDIA always does, and it beats earnings, and also the forward guidance was very good as well. So immediately post those NVIDIA earnings, after market NVIDIA was up over 1%, and because NVIDIA is the general, it is the stock that literally has led the Nasdaq and S&P record highs and floated all the boats globally, equity indexes. It did have a positive effect on risk across the board, and pretty much for the whole of the Asian session. Look, risk was big. But when we did come into the US cash market open, NVIDIA did drop like a rock and ended up closing down 5%, dragging down a lot of the other chip makers as well, and had the Nasdaq down over 1% for the day yesterday. So look, one of the things that the market has been worried about is that AI capital expenditure, just the amount that the companies are spending on AI, and it is obviously a lot, hundreds of billions. Whether or not, obviously that is way too much. So even NVIDIA's outperformance on its earnings wasn't enough to change that narrative or that market theme of that market's worry of AI at the moment. Now, after NVIDIA, the market did have another focus that was very important. That's the geopolitical tensions between Iran and the US. And yes, they had some talks in Geneva yesterday. And market was looking at potentially that this was the last-ditch diplomacy effort before potentially maybe a US and Iran go to war. So yeah, look, a lot of tension, a lot of market stress going into those talks. Crude was trading up towards $67, highest levels we've seen since August of last year. But look, the key takeaways that we got from those talks overnight: one, that there was no deal, but it looks like there's going to be more talks. They've penciled in talks in Vienna on Monday. And these are going to be more technical talks on Monday. So another key takeaway is it looks like there's going to be no imminent full-scale war. So I guess that's a positive. So it relieves a lot of market stress for this weekend. But look, market still thinks potentially that the US could still have maybe a limited strike on the 3 nuclear locations in Iran. So instead of maybe a full-scale war, they just target the nuclear facilities. So again, that's a pretty big de-escalation, I guess, from fears of a full-scale war and what that may mean. So in the last 24 hours, it seems as if some of that market stress has actually been lowered. But again, it is a very fluid situation. And look, could the US this weekend target just those nuclear facilities? Maybe. Could the talks on Monday break down? Possibly as well. So look, it still hasn't been resolved, and so the market still definitely is going to trade accordingly. But anyway, in other market news, what do we have? Okay, Bitcoin's had a pretty volatile week. We did go down, and it has been the weak link in markets. It's been struggling. It did sell off this week violently, back down towards the lows of the year at 60,000, pretty low around 62. But in the last couple of days, we've had a very strong rally. It did rally all the way back up to 70,000. And at the moment, we've got it starting in Asia around 67,500 and whatnot. But look, technically, it's starting to look a little bit more positive in that maybe there's a big double bottom forming around that 62,000 area. So if risk does somehow get through and maybe some sort of positive deals happen with US and Iran, then no doubt that's going to be positive for Bitcoin as well. And if it trips that double bottom above 70,000, maybe targets back up to 80. But yes, it was looking a lot dire this week, but again, technically just failing to take out that 60,000 low, potentially a double bottom. So something to watch out for there. Another market news, I mean, one of the currencies that I like a lot, and I think the market likes a lot as well, is the Aussie. The data for the Aussie continues to outperform in that recently we've had employment data that came out lower than expected, around 4.1. And we've also had inflation data recently, and that is, came out above expectations again, still up towards 4% on headline. And even the trim mean went up. So the RBA rate hike, only central bank that's raised rates or is raising rates, is certainly still a possibility. So Aussies has been trading above 71 cents again. Multi-highs around that 71.50 area. The only thing that I think that can get Aussie lower is obviously if risk gets hit and takes Aussie lower. But as soon as risk is bid, Aussie goes screaming bid, and no doubt is probably one of the better trades in the currency space. So if you know, at the moment, obviously we do have a very big geopolitical issue, but if that does get resolved and it is positive for risk, the first thing I'd be doing in the currency space is buying Aussie, because I think we will break that 71.50 area and go a lot higher. But again, that situation is very fluid, and it looks like we're going to have to wait until Monday to get some resolution from that. In any case, potentially we may go into this weekend trading a touch quiet, but good luck with your trades, have a great weekend, and we will catch back in with you next week.